Yeah, good day, guys. It's Omar here, and this is my first mentorship video. I believe it's going to be a great one, and we're going to share a great stuff together. So take your time, relax, get a book, a pen, because you're about to gain one of the biggest value in the forest industry. And take note, don't joke with any of these things. Don't joke with any of my words. Okay? So I believe we all are going to gain a huge lot together. So let's get started. The topic we are going to be talking about today is called AOI. AOI. Now, what do I mean by AOI? What is AOI? AOI is the point at which you pick a trade in the market. I don't know if you get what I said. AOI is the point where you pick a trade. It's also known as what? Imbalance. Okay? It's also known as imbalance or fair value gap. Now, not just by name, it is the main psychology behind the AOI. I mean, behind the imbalance that we picked in the market. It is the what? The main psychology behind the imbalance that we pick in the market is the point where you pick a trade. That's the meaning of AOI. Is the point where you pick a trade after your what? After your structure has been proven in a particular direction. Do we get that? Now, an AOI is just where you pick a trade, not why. It is where exactly the point where you are picking the trade and not why you are picking that trade. I hope you understand me. Now, after the true liquidity has been induced, note that is after your bias has been confirmed, the place where you pick the trade is where I called AOI. Okay. Now let's assume for a bullish scenario, we have something like this: low, high, higher low, higher 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 high, right? This is a bullish scenario. Now, on a bearish scenario, we have low, lower high, lower 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 low. Now, on a norms, this is what the structure is expected to be, right? But trust me, if market is like this, everyone should be profitable by now. Honestly, if market just continue to give us higher, lower, 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 low, straightforward like this, everyone should be profitable. But then this is not the real structure form. Okay, but then structure is not our topic for today. The topic for today is what? AOI. In my later videos, I'll be discussing about structures and how to pick the real structure, how to identify the real structure in the market. Okay, so let's proceed. Now, how does an AOI form and what is the what meaning of an AOI? Okay, now let's assume for a bullish trend we have, excuse me. So on a bullish price action on a bullish trend, let's assume this is the high, the low, higher, higher low, higher high, higher low, higher high. We now have lower low, right? Before higher high continuation. Now, where is our AOI? This is our AOI. Why? Good. We have we have low, high, higher low, higher high, right? Higher low, higher high, higher low, higher high. Now look at this low. We now have lower low, right? This anomalous behavior of it took the high and took the low, took the high and took the low before continuation. Okay, that low in between the higher low, higher high, higher low, higher high, that is the low that raided the previous higher low and still continue in the higher high direction. That's the AOI. I don't know if you understand what I mean by that. It means the anomalous part of a trend, this anomalous behavior of this trend. The price was going higher, higher low direction, higher, higher, higher low. But at a point, it raided the what? The lower low, the higher low. It raided the higher low to create a lower low before continuation in the upside direction. Mind you, its price must continue in the what? In the upside direction. If price did not continue in the upside direction, let's say price did something like this. Let's say price did something like this. Eh? Price now continue moving in the lower direction like this. This is not AOI. Okay, this is not AOI. So it's quite what? It's quite different. Price has to what? Price has to continue in higher high. So this is an example of bullish AOI. Now on a bearish what? On a bearish trend, this is what we mean. We have high, low, lower high, lower low, lower high, lower low, lower high, lower low. We now have higher high before the continuation of what? Lower low. Okay, this is what? This is our AOI. I hope you understand me. Price creates high, low, lower high, lower low, lower high, lower low, lower high, lower low. This high, this bullish candle or the bullish structure between in between the bearish structure is what we call what? Our AOI. This is an anomalous part of what? Of this structure. So that's what? That is our AOI there. I hope you are getting it. So let me just uh signify it for people that can't hear me proper. So this is the AOI and this is the what? Second AOI for a bearish and for the bullish scenario. Now note this. Price must continue in the what? In the normal direction. It is very, very important. This statement is very, very important. Price must what? Continue in the what? In its normal direction after creating the what? The AOI. That is, after this price took out the previous higher low, yeah, it continue in the normal higher low, higher direction that it's doing. Do you understand? Price continue upward. And this sell too. As price what? Raided the previous lower high, price continue selling down, right? So that's the example of what? The AOI. So we have the types of AOI, or let me call it rules of AOI. It has rules of AOI. So number one rule, we have the convergent rule. Convergent rule. The second one, we have under convergent rule, we have the inverse convergent. Okay, we have the inverse convergent, inverse convergent. That's the first one. The second one, we have the full convergent, the full convergent, excuse me. So we have the what? The full convergent. Then we have the partial convergent. Convergent. Gen. So these are the what the rules of AOI that we have. I'll be talking about these one after the other with examples. So for the what? For the convergence rule, inverse convergence. Oh, I think there is a mistake here. Sorry about that. So for the inverse convergence rules, inverse convergence rule means that there is a what? There is a smaller AOI in between the what? The bigger AOI. Now let me draw the structure for you. Let's assume we have the low, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. We have lower low, high. Now price continue in the higher, okay? So let's continue. So price continue in the what? The higher high, then higher low, higher high, higher low, higher high, higher low, higher high, then lower low before we now have higher high. Now, where is our first AOI? Look closely. Any student that is following what I've been doing, we understand that this is the what? This is the first AOI, right? And where is the second AOI? This is the second AOI. Now, these are the two AOI that we have in this structure, right? These are the two words AOI that we have in this structure. Now, how do you pick the true AOI here? Hmm? Structural wise, this is what you expect price to do. Low, high, and for price to come and tap the head of this first AOI to create the higher high, then price will come here to come and tap this smaller one and move on. Okay, this is your what? Your true AOI. This smaller AOI in between the bigger AOI is your true what? Is your true AOI. Okay, or let me say it is your what? It is your refined AOI. Yes, let me put it that way. It's your what? Refined AOI. Okay, so this is your what? This is the support and your resistance. So you are meant to what? Put your entry here, then your stop loss to be what? Should be below here. Are we together? Please, if you did not get any of this thing, kindly what? Kindly signify. It is very, very, very important. Oh. So it's very, very what? It's very, very, very important. Okay. So this is going to be your what? Your entry point. Why is this thing acting like this? Let me pick it again. Okay. This is going to be your entry point. This is going to be your stop loss. And this is going to be a take profit. Are we together? For a bullish scenario. Okay. Now for a bearish scenario. For a bearish scenario, let's assume we have something like this: high, low, lower high, lower low, lower high, lower low, lower high, lower low, higher high. It's rated this high, okay? Higher high, lower low, lower high, lower low, lower high, lower low. Then you have lower high because it's rated this, it's rated all of this. And continue in the what? Bearish direction. Okay, now as I said, this is going to be our first what? First AOI. This buy in between the cells is our what? Our AOI. AOI 1, and this is our what? AOI 2. These are AOI 2. Okay, I didn't want this video to be too long. So now these are AOI 1 and these are what? AOI 2. On a normal situation, what you expect the price to do is what? For price to come here, for price to use this to create a lower low first before price comes here So you use it and create the and continue in the what? In the market direction. So this is your what? This is your refined AOI. I advise you pick the refined one. Always use the refined one because it gives you more hedge. That is the smaller AOI. So it gives you more hedge. This is going to be your stop loss, and this is going to be your what? Your take profit. Are we together? Are we together? So there are ways you can refine this too. Okay, there are ways you can refine it too. Mind you, I said I called AOI an imbalance, right? I will teach you what the real imbalance and how to pick the smallest imbalance in your AOI. Okay, I will teach you about that. So after this call. So this is about what? This is about the inverse convergent AOI. Now we'll be moving on to the what? To the second one, which is the what? Full convergent AOI. Full convergent AOI. Are we together? So full convergent AOI. Mind you, before we proceed, it is better you draw the structure or the chart schematic before you pick your true AOI so that you can have a clear picture of what? The structure. You understand? Structure can be funny at times and it can be very, very complex. Do you understand? So it is advisable for you to what? To draw out your structure schematic and pick the true AOI in between. So that's that about that. Then we'll move on towards full convergence. Full convergence. Now, what is full convergence AOI? It's more like this, but it's different. Now let's assume we have higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Right? We have lower low. So we have higher high, higher low, higher high, higher low, higher high, higher low, higher high. Now we have lower low. Before we now continue on the upside direction. So I don't know if you understand this. Now this is our first AOI. Please follow me through. Follow through. It is very, very important. All my words are very important, and all these explanations are very important. That's AOI one, and this is AOI two. Sorry, this shouldn't be like this. Okay, so let's say it like this, right? Let's say it's like this. So these are AOI one, and this second one is what? AOI two, right? Now we have this in between this. On a normal, what do you expect? You use this when the price is coming back. Okay, this could have been your break of structure, then your inducement, then price will what? Price will come back here to what? To continue in the direction that it is. Okay, so this is an example of what? A partial. Mind you, this what has been respected by price by coming to tap it before what? Coming to tap the what? The inner what? The inner AOI. So that's an example of a full convergent AOI. Now for the partial convergence AOI, the partial convergence AOI. This is a very, very important and kind of unique one, or let me say it's kind of different. Yes, in the sense that let me give you an example. We have high, low, higher, 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 low, higher, high, 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 higher, low. Let's assume we have lower low here. Then we have higher low. Price continue the upside direction, right? Then we have lower low here, right? We have lower low here. Then before what? Price continue. That is, we have different point of interest. The first one is here, right? Now the second one is what? The second one is here. Excuse me. The second one is here. These are what? The true AOI that we have. Or let's even agree that they mitigate. This mitigated this, right? So let's assume price is like this, right? Now, let's assume the direction of the price is bearish and we have this, right? So now, if you want to pick your AOI, price, you know that price is coming here to what? To continue downward. That is, this is what price is going to use. I think this is creating a wrong impression. Okay, good. So now, I don't like this thing. Let me draw it. Aha, good. So now, this is AOI 1, this is AOI 2. You know they mitigate each other. That is, the two of them looks like they have transferred money to each other, right? But then this is the first AOI that you are meeting. This is the second one. They have mitigated each other. You do not express price to come and use this first. Price has to what? Price has to use this. Never expect price to tap into the second AOI first. Price has to come and tap into the what? This first AOI, and your stop loss will be in the second AOI. If price comes to what? To tap the second AOI, it means price has what? Validate the what? The AOI. Okay, never expect price to touch this second one at this first what? After touching this first AOI, then you what? Take your entry here and your what? Your stop loss will be before this, the candle, before this candle. That's where your stop loss is going to be. Okay, so that's what the inverse, I mean, sorry, that's the partial convergent AOI, which is the third AOI rule. So these are the rules I have for you. Mind you, the price must continue in its what? In its normal direction for a valid AOI to what? To hold. So that's that about that. Right now, we'll be moving on to the chart to show you a few examples of the AOI and what we've been talking about since morning. So stay tuned. Yeah, so I'm trying to get you an example. So this is GBP USD 4-hour time frame. Now let's study. Let's look at this structure. How are we going to what? Know the right AOI in this structure. Let me cut this thing out. Do you understand? So let's assume we are not saying the back here, right? And we want to pick our AOI. This is where market is presently. Now, you have marked your structure as a structure trader. Let's assume this is your valid break of structure, right? Let's assume this is your valid liquidity sweep as structure traders used to say. So now, where are we going to pick our AOI in this place? Mind you, your AOI must be picked from the what? From the trends that what? That break out your structure. I mean, from the structure that break out the structure. That is, it should be from this side and not majorly from this side. It should be majorly what? From this side. Now, what do I mean by that? In the sense that this is the what? The structure that broke this previous high, right? So our AOI what? We start from here. So we have low, high, higher low, higher high. Now we have lower low because it took out this low, right? Before price continuing in the what? Uptrend direction, in the higher high direction. Which means what? As a smart student, these are what? This is our AOI. Are you getting it? So let's see what price did. If price come here or not. As you can see, it's big, right? It's big, yes. There's a way you can what? Refine that cleanly. And don't forget, I said I'm going to talk about the true imbalance before we move on. So these are AOI. Now let's play the candle and see what it gave us. Okay, let me put it in 10x so that it can do pretty fast. So price is what? moving to our point of interest. Price is there, sharp, sharp. Can you see that? So price what? Use the what? The AOI for continuation, giving us like how many, oh, giving us how many risks to reward. Thank you, thank you, thank you, thank you. I don't want this video to be long actually. I don't want it to be long at all, so that it will be of much value. So now, this is our stop loss, and this is what this is our take profit. External liquidity. Always target what? External liquidity. Okay, always target external liquidity. So now look at how many pips the price gave us. Price gave us over, oh my god, this is so fantastic. It works on every time frame. Price gave us over 715 pips. Can you imagine that? So this works on every time frame, every currency pair you can think about. Any, as far as chart is concerned, this work on it. But mind you, this is not what is going to give you your bias. Maybe you are going to buy. This is not what will tell you that you are going to buy. It will only tell you the place where you are going to buy. Not that is the one that will tell you that, oh, we are buying. Oh, it's just going to tell you that, okay, this is where you are going to buy. If you have confirmed that your bias is what? Buying. Okay, so that's for a buy scenario. Let's look for a sell scenario, quick one before. Now we have another example right here. The price has been selling. That we have low, lower high, lower low. You know, I told you to always use your schematics. So it will help you draw out the schematic first. It's going to help you in marking the true structure. So now we have the lower high, lower low, right? The lower high, lower low, lower high, lower low, lower high, lower low, right? Higher high before continuation of what? Lower low. Which means what? Which means this is our AOI. Why? Because it took out this high, right? So this is our AOI, which means this is where you expect price to come back to. And what did price did? Price continue down, come back to tap into it, and what? Continue selling massively what? Massively down. So you can backtest this on what? On yourself. Backtest this on a particular time frame you want, 4 hour, 1 hour, 30 minutes, 15 minutes. Pick the true AOI. Make sure you are picking the true AOI. Target your 1:3 or 1:5 or whatever your ratio is, then write it. Okay, write it. But make sure that your direction is correct, your bias is correct before you what? Before you pick the AOI. Okay, so that is that on that. Let me look for the example of the what? The partial convergent AOI too before we round up for today. So now, before then, I have a nugget that I want to give to you for free. Okay, and what is the nugget? Identifying true imbalance in a candle, right? Now, let's assume that we have the true imbalance in a candle simply means that you have a single bullish candle among bearish candles. That is, let's assume you have 3 or 4 bearish candles like this, right? And price is bearish, as you can see. You now have a bullish candle in between them. Are you getting it? You have a single bullish candle in between them. Let me change the color of this one to be, let's say bullish, right? Let's say bullish is white. Huh? Before price continue bearish. Now, so this is another candle. This should be black. So continuation. Now look at this. You have four candle, but you have a single what? A single bullish candle in between these candles. Okay, this is the what? Your true imbalance. In most cases, it signify your true what? Imbalance. This is Ashirinla. It's a big secret. Do you understand? It's a big secret. Just hold it like that. So this is most likely to be your what? The candle that price will come and respect in between your what? Your AOI or your imbalance. Do you get? So this is the candle that the price is most likely to come out with. Respect. I'm not talking of the structure now. I'm using these candles to explain. You have a what? A single bullish candle in a bearish environment or a single bearish candle in a bullish environment. So it is that candle that price will come out with. Price will come out and use to what? To continue in the direction. That's just a chip. And another way you can pick your AOI is through what? Market gap. How you trade gap. Most cases, look at this gap right here. It can be an imbalance for price to use to continue moving. You know, most of these gaps do happen during new week or new day or new news. You understand? This gap, I mean, this gap is also in form of AOI that price can use at times. Don't conclude immediately. Add it with your what? With your other confluences before you what? Before you make use of it. So it is most time often used as a what? Imbalance that price will come out. Price gapped. So which means it's an imbalance. Can you imagine? See how price sniped it. See how price sniped it. And God knows, see how price sniped it to continue moving in that upward direction. Okay? See how price sniped it. So gap is also used. As for me, these are confluences that are used to pick my trades. So I've talked about like three things now. I've talked about how you can pick with AOI, go and master the AOI. Okay? All the types that I gave with their rules. Go and master what? Go and master them. Master this imbalance, this gap, then the candle. Okay, I've talked about like three things like that. I've talked about three things like that. As you can see, it gave us more than 1 raised to 3. In fact, it gave us more, as you can see. So go and master them. This is how I picked my AOI. And without further ado, if you have any question, you can come into my DM and I will what? I will discuss about. Mind you, this is where you take a trade and not why you take a trade. AOI is the point where you take a trade and not why you take a trade. Okay? Try and draw the schematic of your structure to confirm the AOIs before you pick your your entry. So that you can even pick the best entry. Okay? So with this I say thank you very much. Peace out. Now